Hello, and welcome to today's webinar. I'm Chelsea McDougall, editor of Labels and Labeling magazine. In today's session, which should last a little less than 1 hour, we'll be traveling across the globe with our editorial team as your guides to explore the key trends shaping each region's label and packaging marketplace. Think of today's webinar as a high-altitude view of the market. It's focused, it's fast-paced, and it's grounded in insight. L&L's global editors will each explore the standout developments, investment patterns, and market pressures defining the territory that they cover for the magazine. For those who want to dive deeper after we land, there's a full analysis in our special edition of Labels and Labeling upon which this webinar is built. You can find that at labelsandlabeling.com. This session will also be available at the Labels and Labeling website later today. So grab your passports and fasten your seatbelts. We're about to take off. And I promise that's the last airport pun. Oh, wait, one more. First up, we're going to start at my home airport with North America editor Sela Ziegelboim.
2025 was a complex year for the North American label market. The market, as well as the economy at large, proved to be strong and resilient, yet it faced challenges. According to Mordor Intelligence, the size of the North American label market in 2025 was estimated to be $10.5 billion. It is expected to grow at a 3.42% CAGR from 2026 to 2031, a steady rate of growth. The United States is the largest label market in North America by far, making up about 78% of the market. Meanwhile, the Mexican label market is experiencing a particularly high level of growth at 5% CAGR, as it benefits from nearshoring. The optimism around this market could be seen at Label Expo Mexico last year in Guadalajara. Canada continues to be a steady market as businesses and consumers focus on domestic growth, a topic you can read more about in L&L's first issue of 2026. Overall, 2025 saw GDP growth and strong consumer spending. However, this past year saw significant economic uncertainty as well, particularly around tariffs, which deterred capital investments, complicated supply chains, and contributed to a slowdown in hiring. These tariffs, which have impacted imports from most countries into the United States, have fluctuated multiple times throughout the year, often without much notice, putting companies in a challenging position of figuring out how to respond. The average tariff rate on imports to the U.S. is 17%, according to the Nonpartisan Tax Policy Center think tank. Importers have used a variety of strategies to respond to tariffs, such as by working with suppliers to reduce prices or by absorbing part of the tariff costs themselves. The result is that, while the cost of many goods has increased in the U.S., they have not increased by the full tariff amount. In the labeling industry, suppliers have seen less capital investment, while consumables have remained steady. Beyond tariffs, other label market shifts include an increasing demand for shorter runs, faster turnarounds, and greater customization. The industry continues to face hiring challenges as the workforce ages, fueling an interest in automation and AI. Increasing environmental regulations and consumer expectations drive demand for more sustainable materials and practices. Flexography remains the most prevalent printing technology, while digital technology continues to grow, fueled by demand for shorter runs and variable data printing. So, what does all this mean for 2026? From an economic perspective, the year closed on a relatively optimistic note. Some of the uncertainty around tariffs remain, but businesses now have a better grasp on how to handle it. This, combined with the U.S. Federal Reserve lowering interest rates this past year, has made some hopeful that 2026 will see renewed CapEx spending. Many of these trends will be explored at Loop Americas 2026, taking place September 15 through 17 at the Donald E. Stephens Convention Center in Rosemont, Illinois, just outside of Chicago. This will be the first official show under the new Loop name, following Label Expo's official rebranding. Label Expo organizers announced the name change at Label Expo Europe 2025, in recognition of how label converters are increasingly expanding into manufacturing flexible packaging and folding cartons as well as labels, and in reflection of how inline label technology is disrupting these other packaging segments. The name Loop is an acronym that stands for Labels and Outer Packaging Embellishment. It is also a reference to the magnifying tool commonly used in label, flexible packaging, and folding carton facilities. The name represents attention to detail and high quality. At Loop Americas 2026, visitors will be able to learn about the most significant trends shaping the label industry today. They will also be able to see new technology from hundreds of exhibitors. There will be plenty of product launches as well as examples of smart technology, automation, and advancements in sustainability.
Wow, thanks for that, Sella. How interesting that the GDP and consumer spending have been strong despite all these challenges. I'm, for one, certainly looking forward to seeing all these new technology and how this all shapes up at the first Loop Show this fall in Chicago. So, next up, we're headed to Europe with our European editor, Will Drysdale.
What was once a steady, quietly resilient sector is now in the middle of a structural remix, shaped by sustainability pressure, digital acceleration, and ever more demanding customers across food, drink, pharmaceuticals, and industrial goods. Let's be clear, though, this is still one of the most mature and sophisticated labour markets on the planet. Demand is stable and resilient. However, it's underpinned by a vast consumer goods ecosystem and some of the strictest regulatory frameworks in the world. Labels in Europe aren't just branding tools anymore. They're compliance instruments, traceability devices, legal documents in miniature, and increasingly, sustainability statements stuck directly onto your packaging. The market was worth around $16.8 billion in 2024 and is forecast to climb to roughly $27 billion by 2035. Steady, unspectacular growth, but growth nonetheless, about 4.9% in just over a decade. Germany, the UK, France, Spain, and Italy all continue to dominate in value terms, thanks to their industrial muscle and advanced packaging sectors. But don't ignore the smaller markets. Modernisation and sustainability investment are giving parts of Southern and Eastern Europe sharper elbows and faster volume growth. Now, if there's one force reshaping the market in 2026, it's regulations. Food information rules, chemical safety requirements, pharmaceutical labelling standards, they're all tightening. And that means labels need to be more accurate, more durable, more data heavy, and more compliant than ever. For converters, though, complexity is currency. The more information brands are legally obliged to display, the more valuable specialist converters become, particularly those that can deliver precision at scale without tripping over compliance landmines. Now, sustainability is going from nice to have to prove it. Brand owners are under intense pressure to reduce packaging waste and carbon footprints. Labels are firmly in the spotlight. Thinner face stocks, wash-off adhesives, recyclable constructions, linerless formats, materials compatible with circular systems. The catch? There's no magic switch and it can't be done overnight. Customers are juggling trade-offs between recyclability, performance, and cost. A label that detaches beautifully in a recycling wash may not survive a frozen supply chain. A thinner material may reduce carbon but complicate application. In this environment, though, credibility wins. Certified claims, transparent carbon data, real-world performance evidence. Sustainability isn't just about the materials that companies are using, it's about proof. Now, digital is rising, but Flexo isn't dead. Digital printing continues to chip away at traditional flexo and gravure, especially for short runs, versioning, and personalization. SKU proliferation, faster product cycles, and the relentless march of private labels are fueling the shift. But Flexo isn't packing its bags just yet. For long runs and cost efficiency, it remains dominant. What's emerging instead is a hybrid mindset: digital for agility, analog for scale. The smartest converters aren't choosing sides, they're building flexible platforms. Automation is the other silent revolution. Labour shortages and rising wage costs are pushing investment in workflow software, inspection systems, and smart production lines. And as well as this, smart labels are getting smarter. QR codes are no longer gimmicks, RFID isn't niche, and connected packaging is edging into the mainstream, particularly in pharmaceuticals, logistics, and premium consumer goods. Smart labels support traceability, anti-counterfeiting, and consumer engagement, all increasingly critical as supply chains stretch and brands hunt for deeper customer interactions. In short, the label is becoming a data portal. Now, Europe's label market remains highly fragmented, with thousands of small and mid-sized converters operating alongside a handful of global groups. The consolidation continues to tick along. Private equity still likes the sector's defensive traits: recurring demand, sticky customer relationships, and strong cash generation. Scale alone isn't enough, though. Buyers are looking for value-added capability, attractive end-market exposure, and credible ESG credentials. Succession challenges in family-owned businesses and the need to fund technology and sustainability investment are also accelerating deal flows. Northern and Western Europe tend to lead on sustainability adoption here, and adoption and automation. Southern and Eastern Europe are often more price sensitive but growing faster in volumes. And cross-border expansion sounds logical on paper, but in reality, regulatory differences and customer preference for local suppliers still favour strong regional footprints. Growth overall is likely to be modest but steady. Upsides will come from regulation-driven complexity, premiumization, and smart labeling applications. Cost pressures, energy, materials, labour, they all remain real risks, but they are also catalysts for innovation and consolidation. Now, this isn't a market that's dramatically expanding, but it's evolving. And increasingly, success won't be defined by how many labels you can print per minute, but by how intelligently, sustainably, and compliantly you can deliver them.
Thanks, Will. Thanks for that. So it's clear to me that the question in Europe really isn't whether volumes are going to return, but which markets will come out on top in 2026. So that'll be really interesting to watch. So next up, I'm going to take us on a journey to Latin America. Our Latin American region is recapped in this special edition by our correspondent that covers the region, James Quirk. So as James reports, growth in the Latin American region is modest but steady. And yet there's optimism among machinery suppliers that serve the region about its long-term potential. Pressure-sensitive labels, in-mold and shrink sleeve all continue to gain market share. And meanwhile, converters are opting for digitalization and automation to increase production efficiency. Broadly speaking, though, a lot of the growth is being driven by continued e-commerce, rising disposable incomes, an increased penetration of branded and packaging goods, and greater emphasis on product differentiation and sustainability. Furthermore, investments in local manufacturing capacity and improving print and converting technologies are further strengthening demand for higher value labels in the region. In Latin America, it's interesting because growth forecasts really vary by region, but the region's largest economies are expected to expand. As Sela reported earlier, Mexico is expected to have steady growth, while Brazil, Chile, Colombia, and Peru are all projected to see growth in that 2 to 3% range. Central America is predicted to outperform the wider region at about 3.8%. Argentina is shaking off previous financial restraints, and that really stands out with a 4.8% predicted growth after years of hyperinflation. So Argentina's turnaround has been notable. After electing a new president in December 2023, the country significantly reduced its inflation and boosted exports, supporting this renewed economic momentum in the country. All that said, Latin America seems to have a never-ending cycle of elections across parts of the wider region, and that can often create a lot of uncertainty and unpredictability at times, particularly when it comes to CapEx. Like we said, Mexico remains a promising market, with many equipment manufacturers reporting strong sales after Label Expo Mexico this last year. Chilean converters, meanwhile, are keen to adopt the latest technology. However, their growth is a little bit more limited as it's a relatively mature market already and an already saturated label market. Across the region, though, trends are very clearly emerging. Automation, flexibility, efficiency all stand out. Converters are looking for equipment that minimizes waste, reduces setup time, and also supports shorter run lengths. Many converters in the region are also investing in wider machinery, which is really interesting, and they're moving into that mid-web segment, in order to serve the growing demand for flexible packaging, in-mold, shrink sleeves. At the same time, what's really interesting, wide web converters are looking at mid and narrow web equipment at ways to address shorter runs and just-in-time delivery. So also in the market, the shift from glue applied to pressure-sensitive labels continues across the region, particularly in that beer segment. Also, while shrink sleeves maintain solid growth. Interestingly, market researchers at AWA identified in-mold as the fastest growing label segment in the region with a growth rate of 5.5%. So while the industry in the region continues to face political and economic volatility, the label market remains resilient and is expected to continue growing. It's clear that the Latin America market is strategically important with long-term growth prospects. So, moving on from there, we're headed to China, where Andy Thomas Emans is going to explore this dynamic region based on reporting from China editor Yolanda Wang.
The China label market can be characterized by growth amid challenges. China's label converting industry does continue to grow, but faces significant challenges, including overcapacity and a volatile global market. In 2025, it was a dynamic environment shaped by increasing geoeconomic volatility, global supply chain restructuring, stagnating domestic consumption, and challenging industrial policy directives from the Chinese government, particularly concerning sustainability. Chinese printing industry in 2024 had a total output value of 214 billion US dollars, up 3.9% year on year. If we look at the label printing segment of that, it's now entered a more stable phase of growth after the double-digit growth rate seen in the first 2 decades of the century. Data from the Printing and Printing Equipment Industries Association of China, PIAC, shows that there are 6,888 label converters in China. The reduced cost of printing equipment and increased automation have generally lowered entry barriers and encouraged new players to enter the market. The output value of China's label printing industry reached approximately $8 billion in 2024, still making it one of the fastest growing label markets globally. Total label market volume in China reached 20.8 billion square meters in 2024, with a projected compound annual growth rate of 4 to 5% from 2025 to 2030. Self-adhesive labels, the largest category, had a per capita consumption of only 5 square meters in China in 2024, significantly lower, for example, than the 17.5 square meters in the US and Northern and Western Europe. And this highlights substantial future growth potential. If we look at the challenges faced by the Chinese label industry, it's really overcapacity and intense competition, and this continues to drive structural adjustments within the industry. So, for example, industry consolidation is accelerating. A notable milestone was when Jantan became the first publicly listed company in China's label printing industry to go onto the Beijing Stock Exchange on December 26, 2025. To adapt to market changes, converters are optimizing their business structure to enhance competitiveness. And these strategies include cutting low-margin commoditized business, focusing on niche markets, and redirecting resources towards high-value-added products and services. So, for example, Shenzhen Shuangchuan integrated conventional and digital printing to offer diversified label solutions to its clients. Guangkai reduced its workforce by 30% through automation, whilst maintaining a stable revenue. Converter Boyer expanded into folding cartons and flexible packaging, creating a diversified product portfolio to mitigate market risks. Dongguan Sunway now targets niches such as printed electronics, batteries, and medical devices, and has established a department for fireproof materials, all integrated with its core FMCG label business. We've also seen overseas expansion as another key trend. And this is really, again, driven by overcapacity in China's label market. And the intense competition, which we spoke about earlier, has prompted the industry to expand into overseas markets. So at Label Expo Europe in 2025, over 200 Chinese exhibitors participated, setting a new record. At the same time, international brands are diversifying their manufacturing away from China and deepening their presence in emerging markets such as Southeast Asia, the Middle East, and Latin America. And this has supported Chinese enterprises in accelerating their global expansion, both suppliers and now converters. Regional trade agreements like RCEP are providing broader opportunities for Chinese companies to internationalize. So in conclusion, we can say that the Chinese label industry still continues to have a healthy growth rate, certainly compared to the rest of the world. But at the same time, faces challenges of intense competition and overcapacity in the domestic market, which will continue to drive trends towards diversification and global diversification.
Thanks for that, Andy. That's really insightful. So, as we leave China, a market that's defined by scale and increasingly sophisticated production, let's shift our focus to a region that's shaped by a broader embrace of automation. So, reporting on the Middle East and Africa market is Akansha Mina. Akansha, on to you.
In 2025, the labels industry across the Middle East and Africa navigated a period of major transformation. Converters faced rising operational costs, supply chain volatility, workforce constraints, and increasingly complex brand demands. At the same time, the region is also seeing a shift towards high speed, flexible, and automated production. Over the past year, converters across the Middle East and Africa region have also been rethinking their technology investments and operational models to stay competitive in a rapidly evolving market. One of the significant shifts across the region was growing demand for short run, high quality label production. New brands entering into the market and increase in SKUs have pushed converters to move beyond traditional long run production. Hybrid production, where digital complements conventional processes, is becoming increasingly common for this reason. And the high demand for short run and emergence of new brands is also pushing the packaging industry to adopt digital processes. This shift is not limited to the Middle East. In East Africa, for example, brand owners are demanding shorter lead times and greater SKU flexibility. Converters in the East Africa region are also prioritizing quick turnarounds, smaller batch sizes, and consistent quality. Alongside speed and flexibility, sustainability is becoming increasingly central, with more demand for recyclable structures and low waste packaging. Automation and advanced press technologies are now critical for helping Middle East and African converters to remain competitive. These technologies help converters offset rising operational cost while maintaining quality and consistency. High-speed digital inkjet is also expected to have an impact on the labels and packaging industry in the region. It helps converters produce economically viable short runs while supporting greater personalization. At the same time, automation in flexo, prepress, and label finishing continues to advance. Many converters across Africa are also adopting AI-enabled planning tools and predictive maintenance to improve reliability and reduce unplanned downtime. Despite strong momentum, the Middle Eastern African converters continue to face significant challenges. For example, extended lead times, fluctuations in raw material availability, and increase in freight cost contributed to much of 2025. These pressures were further compounded by skilled labor shortages. This is pushing converters to invest in equipment with higher automation to reduce dependency on manual intervention. In East Africa, logistics disruption remained unresolved. Financial instability added another layer of complexity. Currency volatility across African market has also made substrate planning more difficult, forcing converters to diversify sourcing. Economic uncertainty also was observed in some markets. In Kenya, for example, high taxation has reduced consumers' disposable income. In Middle East, converters are facing intense competition from China. Rising operational and living costs in the UAE are affecting rents, wages, and overheads. The result is tighter margins and tougher competition for converters. In conclusion, across the Middle East and Africa, the labels industry in 2025 embraced automation to deliver speed, flexibility, and quality. Those who invest in automation, optimize productivity, and build a resilient supply chain will be best placed to thrive in this rapidly evolving region.
Thanks for that, Akansha. Now let's turn our attention to the Asia Pacific region, what we're calling a global powerhouse. With more on that is Labels and Labeling's Southeast Asia editor, Piyush Fanuk.
Southeast Asia is becoming the global epicenter of packaging innovation. With markets worth over $190 billion and growing at nearly 7% annually, this region is reshaping how the world thinks about flexible packaging and folding cartons. Let's dive into what's driving this revolution. Firstly, some numbers. The Asia-Pacific region dominates global packaging markets. It accounts for over 40% of worldwide flexible packaging demand and nearly 39% of folding carton sector. But it's Southeast Asia that's emerging as a real growth story. Here, another portion of numbers. The flexible packaging market in this region is projected to grow from 22 million USD in 2025 to 28 billion by 2030. Meanwhile, the broader Asia-Pacific folding carton market is expected to surge from 168 billion USD to staggering 272 billion by 2032. That's the market opportunity worth $104 billion. So what's fueling this explosive growth? There are three factors. First, e-commerce. Southeast Asia's online sales now account for 60% of global e-commerce revenue. That's creating unprecedented demand for lightweight, durable packaging that can withstand shipping while keeping costs down. Secondly, urbanization and rising incomes. As millions of people in Indonesia, Vietnam, Thailand, or Malaysia join the middle class, demand for convenience packaged goods is skyrocketing. And thirdly, sustainability. Consumers and the government are demanding eco-friendly packaging, and the industry is responding with breakthrough innovations. So let's break it down and talk about flexible packaging market in the region first. This sector is being transformed by several game-changing trends. Material innovation is leading the charge. Companies are developing biodegradable options while using plant-based plastics and even mushroom-derived packaging materials. Water-based barrier coatings are replacing traditional plastic laminates, and the shift towards monomaterial product is making recycling far more effective. Technology is the second major disruptor. Digital printing has revolutionized the industry, enabling on-demand production and customized packaging without the massive setup costs of traditional methods. And finally, there is smart packaging. QR codes, NFC tags, and even augmented reality features are turning packages into interactive experiences. Customers can scan a code to verify authenticity, access product information, or even see virtual product demonstrations. Modified atmosphere packaging is extremely important in this region as it extends shelf life for food products across the region, particularly in those hot, humid climates. And an e-commerce optimization has become crucial with packaging that's lightweight, yet sturdy, tamper-evident, and customizable for everything from electronics to fashion. Now, let's move on to folding cartons. This market is definitely having its own renaissance in the region. With food and beverages accounting for over 60% of this demand, the sector is being driven by both practicality and sustainability. What makes folding cartons so appealing? Well, they're primarily paper-based, which means they're inherently more recyclable than many plastic alternatives. Government mandates across China, South Korea, and Japan are accelerating the adoption of biodegradable options and standardizing recyclability requirements. Innovation is happening at every level. Water-based barrier coatings are providing moisture and oxygen protection without plastic components. Easy open features, reclosable designs, and creative structural innovations like hexagonal pyramid shapes are exciting, enhancing both functionality and shelf appeal. Smart packaging integration is huge in folding cartons too. Brands are embedding QR codes for product identification, NFC tags for real-time tracking, and RFID chips for anti-counterfeiting protection. Digital printing adoption is particularly significant for faulty cartons, enabling short-run customization, faster turnaround times, and enhanced design flexibility that was simply impossible just a few years ago. Most importantly, however, the folding market offers a significant opportunity for roll-to-roll label converters seeking additional revenue streams. Of course, explosive growth comes with both opportunities and challenges. The opportunities are massive. E-commerce in Asia Pacific is expected to reach 5.5 billion users by 2030. That's billions of packages that need to be delivered safely and sustainably. Companies that can offer eco-friendly packaging are commanding premium prices, and consumers are willing to pay for it. Technology investments in digital printing and automation are paying off with improved productivity and cost competitiveness. And there's enormous potential in specialized markets, from halal-compliant packaging in Muslim-majority countries to premium luxury packaging segments. However, challenges exist too. Plastic waste management remains a critical issue in the region, with recycling rates below 20% in some of the markets and inadequate infrastructure in developing regions. Extended producer responsibility regulations are increasing compliance costs across Vietnam, the Philippines, Malaysia, Indonesia, or even India. Raw material costs are volatile, linked to crude oil prices and global supply chains, and there is significant technology investment required, particularly for smaller manufacturers trying to compete in digital printing and automation. The regulatory landscape is fragmented too, with different environmental standards across countries, making compliance complex for companies operating regionally. Despite these challenges, Southeast Asia's packaging sector is positioned for extraordinary growth. The convergence of e-commerce expansion, sustainability imperatives, and technological innovation is creating a perfect storm of opportunity. Major industry events like Propac Asia, Aloop Southeast Asia in Bangkok, are expanding to larger venues to accommodate growing demand. Billions of dollars in mergers and acquisitions signal industry confidence and capital commitment to the region. For companies willing to invest in sustainability, embrace new technologies, and build collaborative partnerships, Southeast Asia isn't just a market. It's the future of global packaging innovation. And that future is being written right now.
Thank you so much for that. And for our last regional recap, let's turn our attention to India. India stands apart for its demographic strength and accelerating investment in manufacturing. Adyasha Sinha, our India editor, has more on that.
If you ask 4 different leaders to describe the Indian label and packaging market in 2025 using just one word, you will get 4 very different answers: transition, transformation, aspiration, and most honestly, uncertainty. It sounds like a contradiction, doesn't it? But for India right now, it's the perfect description of an industry that is simultaneously finding its feet and reaching for the stars. Hi, I'm Adyasha Sinha, the India editor of Labels and Labeling, and I'm here to take you through our 2025 year in review of India. It's been a year where the numbers are massive, The technology is blurring traditional lines, and the face of leadership is changing in ways we haven't seen before. Let's start with hard facts. According to research from Modern Intelligence, India's printed label market hit a valuation of $2.46 billion this year. Grandview Research adds that the broader segment is growing at over 13% annually. To put that growth in perspective, Bobst reports that per capita label consumption in India has jumped from a tiny 0.25 square meters in 2008 to nearly a full square meter today. Patrick Raber, marketing director PL label at Bobst, puts it as we aren't just consuming more, we are consuming better. But perhaps the most exciting narrative of the year comes from industry veteran Harveer Sahani as India Rising. We have seen a massive surge in middle level converters who are moving away from basic used machinery and investing in sophisticated modular flexo presses made right here in India. But it's not just the machines that are new. Sahani points to an inspiring social trend where more and more young women are emerging as leaders in this segment. This new guard is perfectly in sync with what Pavan Chauhan, Country Business Manager, Industrial and Inkjet Business Solutions at HP India calls millennial-led consumption, a market that demands instant gratification, shorter runs, and total customization. This demand is causing what Amit Ahuja of Multitech calls as a transition in how we define a printer. The boundaries are blurring. Narrow web label converters are now stepping confidently into mid-web formats, producing pouches and shrink sleeves that used to be the exclusive domains of giant flexible packaging plants. Prabhakaran S., Senior General Manager at Epson India, calls this a transformation driven by brand owners who are no longer want mass campaigns but micro campaigns with a massive number of unique SKUs. Of course, with high speed comes high stakes. This is where the uncertainty comes in. Manish Kapoor, sales manager at Nilpita India, notes that while the year started strong, it hit a mid-year low due to tariff issues. The industry is also locked in a vicious cycle of narrow margins. He observes that the market is beginning to consolidate with financially disciplined converters pulling ahead while short-term disruptors struggle to survive. But as we move towards the future, the talk of the town is Loop India 2026, which we bring in this year in October. The rebranding of Label Expo India has sparked quite a debate. While Multitech and Epson see it as a necessary evolution that reflects a unified packaging ecosystem, Sahani and Kapoor share a common fear that the humble label might get lost in the crowd of a much larger show. Graeber is also calling for a change in the event's business model, noting that in a price sensitive market like India, organizers must create sustainable models that doesn't place the entire financial burden on brands. So whether you see 2025 as a year of aspiration or uncertainty, one thing is undeniable. The Indian market is no longer just a promising gold mine. It is a maturing, high tech powerhouse that is finally setting its own pace on the global stage. Well, that's it from me. Thank you.
Thanks, Adyasha. We're looking forward to seeing these trends at Loop India coming this October. So now let's take a step back from a regional lens. And there's one thing that connects every market that we've covered, and that's the evolution of packaging design. Let's head back to Akansha Meena with a look into the design trends shaping the industry.
In 2025, packaging design stopped just being about shelf appeal. Instead, it became more about compliance, material responsibility, transparency, and digital connectivity. Packaging is no longer judged only on how it looks, but on how well it performs in a regulated, sustainability driven, and digitally connected world. One of the biggest drivers of change in 2025 was regulation. Across the world, countries updated their packaging laws to meet urgent sustainability goals. For example, in Europe, the Packaging and Packaging Waste Regulation, or the PPWR, officially came into force in 2025. Regulations like the PPWR and Germany's Inc. Ordinance now require recyclable and reusable materials while phasing out problematic substances like the PFAS. For designers, this has a direct impact. Labels must now carry more mandatory information, including details about recyclability, material composition, and disposal. The second major shift in 2025 was the move towards compostable and monomaterial packaging. Brands are actively looking for alternatives to conventional plastics as consumer awareness grows and regulations tighten. As a result, compostable materials are gaining traction in food packaging, helping divert waste from landfills. At the same time, monomaterial structures are replacing complex multi-layer packaging. Using a single layer material makes packaging easier to sort, recycle, and process within existing recycling systems. The third major trend was paperization. Brands are moving away from plastic towards paper-based alternatives. New paper materials with advanced barrier coatings now offer improved moisture, grease, and oxygen protection, making them suitable for wider applications. Consumer perception also plays a role here. Paper is widely seen as more environmentally friendly, which boosts brand credibility. Regulation is further driving this shift towards paperization. For example, under the EU PPWR, packaging must be recyclable by 2030 with strict limits on multilayer plastics. The fourth trend was traceability, which has now become non-negotiable. A key driver for traceability was the introduction of digital product passports or DPPs. DPPs now require standardized data on materials, composition, recyclability, and environmental impact. This information must be accessible across the value chain. Most commonly, it is delivered through QR codes or other data carriers. This means packaging must now accommodate digital gateways without overwhelming the visual identity. Lastly, connected packaging was one of the fastest growing areas in 2025. Technologies like QR codes, NFC, and augmented reality are linking physical packs to digital experiences. Connected packaging supports brand storytelling, personalized content, and enhanced transparency. This trend is also being driven by GS1 Sunrise 2027, which is pushing transition from traditional barcodes to QR codes by 2027. Connected packaging also supports regulatory compliance, authenticity verification, and supply chain visibility. With the help of connected packaging, brands get real-time insights in tracking and richer data insights. In conclusion, packaging is no longer just a container. It's a compliance tool, a data carrier, a sustainability statement, and a digital touchpoint. For brands and designers, success now not only depends on creating a packaging that looks good, but works responsibly and communicates intelligently. And that's the new reality of packaging design.
Well, folks, that's a wrap on today's webinar. Thank you so much for joining us. As mentioned before, today's session will be available soon at labelsandlabeling.com. There you can also find the full special edition of the magazine where we dive deeper into the trends that we explored today. I'm your pilot, Chelsea McDougall, signing off. Thanks for joining us.